CNBC TV 18, celebrating 15 years of leadership.
Hello and welcome to Markets Today. I'm Lata Venkatesh and with me is Rima Tendulkar. Rima, well, nobody was quite prepared for this kind of a strong rally in the markets. For the past 2 days, the markets have been mildly positive, and we attributed it to the fact that volumes have been thin, and with FIs not there, traders are bidding up positions. But today, you will have to say there seems to have been some actual institutional buying. Good day on the bourses.
Yes, indeed. There's no taking away. Only towards the end, we came off a bit from the high point of the day. But overall, no complaints. But let's kickstart the show then with the top headline. Strong day on the Dalal Street with the Nifty ending up 1.35%, just shy of that 8,400 mark. Sensex surged 380 points. Though the mid-caps closed off from the high point of the day, the advanced decline ratio was strong at 5:2. The Bank Nifty hits a new lifetime high of 19,000 today.
Veteran fund manager Akash Prakash of Amansa Capital sees Indian corporate earnings growing by over 20% compounded over the next 2 to 3 years. He sees the stock markets delivering a similar growth.
In auto sales, Escort saw its total tractor sales decline by 21% in December. TVS Motors ended down 3.5%, post disappointing the street for the second consecutive month. Tata Motors reported a 10% jump in sales, while Bajaj Auto sales were muted, down 3% year-on-year.
Well, those were the headlines, and here are the experts that we have lined up on the show for you today. Market perspective from veteran fund manager Akash Prakash. Like we told you, Manish Gunwani of ICICI Prudential will talk about the larger picture as well. And we will get you the managements of some of the companies that were in the news today, Rajiv Bajaj included.
Okay, straight away, let's get on to the day's trading action. The bulls have shaken off their New Year hangover, and how. A bumper rally on the Dalal Street with the blue chips leading from the front. Anand Singhal is here as always with the day's market action.
Well, what a stunning day for the markets. The new year has clearly begun in a strong way, and clearly it looked like a lot of FI money was back on the tables today. At least that explains the way stocks like HDFC, ICICI, Larsen & Toubro, Asian Paints, all these stocks rallied. Clearly all the FI favorite stocks for rallying in trade today, and that was telling you that maybe the participation is back. The volumes also surged in today's trade compared to yesterday. More than double of yesterday's volumes is what we had in today's trade. And just to add some more stocks, Infosys, Tata Motors, all these stocks did well. So quite clearly, there was a lot of buying that we saw in trade today. Apart from that, even cement stocks looked good, Ultratech and ACC. Today was a large cap driven day. It's not to say that there was not a big mid cap rally. There was, but the large caps dominated. But still, there were a couple of mid caps that stand out. One was JP Associates, that had a big rally, and the other was South Indian Bank. So big gains in a lot of these individual names. But clearly, as of now, bulls believe that they are firmly in control now, and a breakout is imminent if it hasn't happened already.
Right. Anuj referred to the fact that it was not really a mid-caps day, and Rima also warned you that towards the end there was some selling off. That sell-off actually came in the Bank Nifty and in particular in the PSU Bank Index. See that sharp fall-off after about 2 o'clock. If I picked out individual stocks for you, you will see a much sharper fall. State Bank of Travancore, State Bank of Mysore and State Bank of Bikaner in Jaipur. These three had run up on expectations of a merger. Really, there is nothing much to speak because they would anyway merge with State Bank of India someday. And therefore, that unwarranted rise that we saw in these stocks saw a bit of profit taking before the weekend. Likewise, Syndicate Bank, Indian Bank, Allahabad Bank, UCO Bank, Union Bank, they will all come up for you, and you will notice how you would have seen in all these stocks a goodish bit of last minute selling. A banker's conclave is on and some reforms are expected, but some of these ran more than the others on expectations of consolidation. So some of them had to see some profit taking. They were purely speculative rallies, so profit taking had to come, lest the banking conclave not throw up anything concrete, especially nothing concrete on consolidation.
Okay, let's get in a market voice then. Veteran fund manager Akash Prakash of Amansa Capital sees Indian corporate earnings growing by over 20% compounded over the next 2 to 3 years. He also sees the stock markets delivering a similar growth as last year.
I think earnings growth in India over the next 2 to 3 years will be quite strong. I think Indian earnings growth will get back to 20% plus because you're coming off a low base with the economy accelerating, with rupee at 63, 65, whatever it is, with oil commodity prices down. I think the earnings growth will be strong. So I think over the next 2 to 3 years, India will compound at 15 or 20%. I think that, which is really what my view of earnings growth will be. I'm making an assumption that multiples will hold. Because interest rates are coming down, they may not expand. So the bulls will argue that multiples will expand. I said, don't assume that. Assume multiples hold. Earnings growth over the next 2 to 3 years will be 15 or 20%. So the market should compound at that. I would have a large chunk in the banks. I think that's an obvious one which we've maintained for a long time. I would have a large chunk in consumer discretionary stocks. So whether it be autos or white goods or stuff like that, because I think there again, as consumer confidence comes back, as interest rates start going down, as confidence comes back, you'll see a pickup. And they're coming off low base. Most of these things have not grown for the last 2 to 3 years. And, and long-term trends are at 10-15% growth. So I would have, these are two big chunks. I still like IT. I know IT is going through short-term pain right now, but I believe the rupee will continue to depreciate slowly and systematically over the next 12, 18 months or next 2 to 3 years. What Mr. Rajan is doing is right, which is that he wants to be 100% sure that he has really broken the back of inflation. I think he will cut. I think it may be slightly later than what people expect. But I think he seems determined that when he does, it will be quite significant. I think he made statements to the effect saying that when we do cut, it will be deep and it will be significant and stuff like that. So in calendar 2015, I think very high probability. Sometime in the first half, I would say high probability. And when it cuts, I wouldn't be surprised if it's 50 basis points at a time.
And do remember, you can catch that entire conversation with Akash Prakash at these times, of course, only on CNBC TV 18. Moving on to all the action from the futures and options space, let's go across to Nigel D'Souza. Nigel?
Well, in the derivatives market in today's trading session, it looked quite good. So put trading made you a lot of money, while a lot of the money, call buying as well, made you good money. So take a look at the couple of puts, the 8,400 put as well as the 7,800 put. Both of them were getting written in today's trading session. So the 8,400 put, that's of significant importance because the premium is roughly around 80 to around 100 bucks. So the stop loss comes in closer towards that 8,300 odd level. The 8,500 call, meanwhile, as well as the 8,400 call, buyers of both those two calls, they seem to be unwinding their positions and now taking a bit of a punt by going and buying the 8,800 call as well as the 8,700 call. Remember, the premium today's session only, it sold up by nearly around 40 to around 55%, and it's only around 12 to around 25 bucks odd. So traders taking a bit of a punt, booking some of their call buys, and in fact increasing their exposure by going out there and buying an out of the money call option at around the 8,800 as well as the 8,700 mark. The reason that the Nifty ended with big gains in today's trading session is because the HDFC, that one did see big buying in today's trade, while the Bank Nifty on the whole did a relative outperformance. Fresh all-time highs, big buying being seen on a couple of banking stocks, the likes of ICICI Bank as well as Axis Bank. Both of them looked very good. Sensex Sterlite, that stock has been beaten down, but in today's trading session, it came in for a bit of a short covering bounce, while LIC Housing Finance as well ended at the high point of the day. Big buying being seen on that counter, while in a couple of stocks we did see some unwinding pressure, the likes of Allahabad Bank as well as Andhra Bank. Both of them did see unwinding of longs.
Thanks, Nigel, for running us through that. But moving on, India's top PSU bankers and select policymakers are in Pune for a 2-day retreat. The event, called Gyan Sangam, will be a brainstorming session to give a facelift to PSU banks. Lata, you've been tracking this space very closely. Give us a sense of what to expect.
Well, it is clearly high profile because all the bankers, chairman and executive directors of public sector banks are there. And the warm-up to this is going to happen with group discussions that's already underway on 6 topics: consolidation, inclusion, priority sector, risk management, human relations, HR, that is, and technology. And some of the best thinkers in that field, people have already submitted reports in previous years. PJ Naik, S. Raman and Mahupatra, the former Deputy Governor of the Reserve Bank. These are the gentlemen who will be speaking about consolidation. Dr. Naik has already submitted a Naik report on improving public sector banks. Then on financial inclusion, you have people like Nachiket Moore speaking along with other experts on priority sector. So on infotech, you have people like V. Vaidyanathan of Capital First, formerly of ICICI, and Professor Shiv Kumar on priority sector. There is Mr. Ghosh from Bandhan, and Ramesh Ramanathan, the person who started Janalakshmi, a very famous banker. As well, you've got some oration coming on pure leadership. Swami Sukhbodhananda is going to be speaking on leadership. KV Kamath will speak tomorrow on MSME and SME lending. So, all this gyan, if you please, is going to be metamorphosed into pure reforms for public sector banks, which the bankers themselves will suggest along with their resource persons. They will also have the help of talk from the finance minister, the Minister of State for Finance, the finance secretary, the financial services secretary, and the Prime Minister himself. Apparently, a blueprint will be presented to the Prime Minister, or it will be hammered out along with him tomorrow after 4 o'clock when the Prime Minister will address that gathering. Those pictures are, of course, all the bankers arriving in Pune at the NIBM campus to start the meeting.
Thanks, Lata, for taking us through that. Let's move on. It's a new month and auto sales numbers have trickled in. So how did the automakers fare in the month of December? Sonia is here with a consolidated list of the numbers. Sonia, over to you.
Well, from the auto sector, a couple of disappointments is what we had today. First, Bajaj Auto, where the company has delivered a sales drop of 3% at 2.89 lakh units, and the motorcycle sales for the company were down about 6%. Then you had TVS Motor. The stock was down 3.5% after the company delivered a sales growth of just 20% versus expectations of around 25%. Apart from that, Tata Motors, it was a decent set of numbers from the company. Total sales growth was up about 10%. Passenger vehicle sales have seen a growth of around 30%. The commercial vehicle sales were flat, but at least there was no drop in commercial vehicle sales this time around. Escorts was a weak set of numbers that the company delivered. Total tractor sales were down 21% this time around, and domestic tractor sales were down about 24%. So all in all, it has been a hit and miss sort of a month for the auto sector, more on the side of weakness rather than strength. Back to you.
Thanks, Sonia. On that note, let's hear our Rajiv Bajaj, Managing Director of Bajaj Auto, as he sums up the month gone by.
Retail has been very slow for all products, all brands across the industry in November and December. It's well known December is the softest month of the year. So I think the market is playing out as per past trends, and definitely from January it will bounce back.
And cars, of course, are all set to get more expensive after the government withdrew the excise duty SOPs offered to car makers. M&M just told us that a price hike is inevitable. Speaking to CNBC TV 18, Praveen Shah of M&M said that they have to pass on the increase in excise duty to customers, and a decision is likely to be taken in a couple of days. Listen.
The type of increase in the excise duty which has happened, or the extent of excise duty increase which has happened, which ranges from 3 to 6%. Normally, nowhere actually the price increases are in this range. Price increases are 1%, 1.5%. So, I don't think actually, as a manufacturer, we can afford to not pass on the increased excise duty. So, surely we would also be passing on the increased excise duty to the customers, the entire amount. We are in the process of taking the call, and it should happen in the course of next couple of days.
Okay, Sonia is still here with us. Thanks, Sonia, for that. Bharat Forge was another stock that you tracked that was buzzing in trade today after announcing the acquisition of a French company in the oil and gas space. You spoke with the management. What were your key takeaways?
Well, thanks for that. Positive news flow from Bharat Forge. The company has acquired a French company called MGL, or Mechanic General Langrois, for 11.8 million euros, and this company focuses on precision machining in the oil and gas industry. Now, this company also supplies components to the power sector. The management told CNBC TV 18 this acquisition is EPS accretive. They target to make this a $200 million business, and they will fund the acquisition from internal accruals. The French company will help supply $15 to $18 million of components, and they want to increase their presence in the oil and gas space. So that's the eventual eventual target for Bharat Forge.
Thanks a lot for that, Sonia. On that note, let's take a break. But coming up, more market opinion from Manish Gunwani of ICICI Prudential. We'll also get you some trading ideas.
CNBC TV 18, celebrating 15 years of leadership.